Hello everyone and welcome to a new weekly market outlook video. As always, let's start with looking at the economic calendar. As you can see, for next week, Monday 17th of November, we start with no news, as well as on Tuesday. On Wednesday we have FOMC meeting minutes. Don't get confused, this is not the real FOMC. Meeting minutes is just always less volatile, it's less volume in the markets, so that means that you can trade even the London session and the New York session of that day because there is not as much volatility as with the real FOMC. Then on Thursday and Friday we have also a lot of high impact news events in the New York sessions, which always means more news events means for me more opportunity. So I'll be closely watching the markets on Monday and Tuesday, and I will be pushing buttons from Wednesday onwards. Let's dive into the charts. Curious to see what happens next. There's no real high impact news event like no FOMC, CPI or non-farm payroll. So this means that we can just treat every single trading day like the same. Let's dive into the charts, the favorite thing to do. First and foremost, what I've been pointing out ever since here is that I would really loved euro to trade into this area over here. Why? Because we had this sell side liquidity over here below this internal low and below these internal lows over here. And also we had a BPR, which is a balanced price range. And what a balanced price range means is a fair value gap colliding with an inverse fair value gap, which means a lot of internal range liquidity. Price is always doing one of two things, and that is it's trading into internal range liquidity or external range liquidity. But the one thing it is always doing, it's looking to trade into liquidity. So as you can see here, for example, for DXY, we have been trading into this BPR, same BPR that's shown over here at the euro, but we've been trading into this one already, like in the beginning of October. So DXY already traded into this internal range liquidity over here, and there was no single internal range liquidity area over here to trade towards. So what did DXY do? Instead of the euro, who traded into this internal range liquidity over here, into this BPR, DXY was trading into external range liquidity, which is external range liquidity is always the highest high or lowest low, the liquidity above the highest high of a range, or the liquidity below the lowest low of a range, which is called sell side liquidity, and the liquidity above the highest high is called buy side liquidity, as noted over here. So you saw that DXY traded above this buy side liquidity over here, traded into this buy side liquidity pool. While doing that, we created a SMT, smart money technique, with the euro, where the euro created a higher low over here, DXY created a higher high, and they are inversely correlated. So usually when the euro or when the DXY creates a higher high, the euro should create a lower low, which it didn't because we traded into this internal range liquidity over here. And ever since that, we've been reacting sharply, traded higher, created only bullish candles until Friday, created the highest high of the week on Thursday, the high of the week on Thursday. So what I expect us to do next is trade even higher because we have no bearish cracks, no internal range liquidity over here where we can react from, and this SMT in combination with this high time frame PD array tells me that this is a nice place for us to react and reverse in price direction. So gun to my head, what will the euro do next? What will the DXY do next? I expect us to trade lower on DXY and higher on the euro unless proven otherwise. Then let's move on to Bitcoin. Bitcoin is also really interesting to follow right now. A lot of people are panic selling on Bitcoin, saying we're now in the bear market has begun. Because if you look at the daily chart, over here you can see like this looks really bearish, and obviously we are in a bearish structure on the daily chart. As you can see, we created the SMT over here with the highs with Ethereum. And since that, we've been respecting bearish PD arrays that were in premium. Like, I always look at price ranges. Let me see. Over here, you can see when we pull this range from high to low, you can see the 50% level over here. This is what divides premium from discount. Everything above the 0.5 level can be seen as premium. Everything below can be seen as discount. What I do with these levels is whenever we are in a bearish price structure, I want to short from a premium PD array. When we are in a bullish price structure, I want to long from a discount PD array. So what this tells me, like if we see here now for the Bitcoin on the daily chart, we've been having this SMT, we've been having this expansion to the downside, this displacement on both Ethereum and Bitcoin. So we were from here onwards, we were in a bearish order flow. So what I do in a bearish order flow, I will be looking for bearish PD arrays in premium to take shorts from. So where is a PD array in premium over here? You can see that we have this fair value gap over here on Bitcoin. We've been trading into it and trading lower ever since. But it's all perspective, because if you zoom out, let's take this off the charts. If you zoom out on both Bitcoin and Ethereum, you can see that we're still in a bullish order flow. From this range onwards, low, high, what I just told you, low to high. We've been trading below the 0.5 level over here into this PD array in discount. Look at how beautiful this is. Into this PD array in discount, into this fair value gap, created a model over here, been trading higher ever since. Now if we do the same here, this range low to high, we've now been trading since since last week, I'm sorry. We've been trading below the 0.5 level, because obviously this is the daily chart. And where's the next PD array to see on in discount on here on the weekly chart for Bitcoin? It's, for me, this fair value gap over here. This is an area I'll be watching, also because we have here higher lows closely next to each other, which means like there's a sell side liquidity pool over here as well. So I'll be looking for Bitcoin to trade at least into this sell side liquidity pool over here when we sharply trade through it, and also don't respect this order block over here, this bullish order block. Then I'll turn bearish on the really high time frame. But for now I'm still bullish if you look at the weekly chart. So I'll be looking into this fair value gap over here, and I'm curious to see if we can trade higher from there. Same goes for Ethereum. We pull this range out. You can see we just reached the 0.5 level as well, but we have a fair value gap over here. But this is the one I would love us to trade into. So gun to my head, what I expect Bitcoin to do next. Maybe next week will also be bearish as well, because we need to trade lower anyways to trade into this bullish fair value gap. But after that, I can see it reverse again and go into higher prices. So gun to my head, what I expect Bitcoin to do next is trade higher after reaching this PD array. Last but not least, gold and silver. For gold and silver, I'm pretty indecisive. What you can see here is we have cracks on the bearish side. We have also cracks on the bullish side, as I've shown last week. Last week I said I expected us to go higher, which we did. But now we've been respecting this bearish fair value gap over here in premium. Now we've been trading into this bullish PD array fair value gap over here in discount. And it's interesting to see now whether we're going to respect this area or not. I expect us to trade higher. Why? Because we've been trading into this inverse fair value gap as well on, let me take this fair value gap off. On gold, we've been trading into this inverse fair value gap on silver as well. We have relative equal highs on silver, which always means that there's a lot of buy side liquidity above it, because there's a lot of stop or loss orders over here, and also above here people see this as resistance, which is a reason for the market to trade higher. And we obviously have these double crack still in place that I mentioned last week. So gun to my head, I would say I would love gold and silver to trade higher, but yeah, let's see what next week delivers, because this is the least obvious one in my opinion. That was it. That were the analyses of this week. I hope it was insightful, and I'd love to see you in the next one. Take care.